we're in an election year, and naturally it comes with uncertainty. AlexForbes highlights this as one of the key trends that will lead to a mixed investment environment this year, as electioneering and election upsets are likely to add to market volatility. Company's chief economist, Mpho Molopyane, joins us with more detail. Mpho, thank you so much for being with us this afternoon.
Afternoon. Thanks for having me.
A big, I think, acronym that's going around at this point, it's going around is the of VUCA. It's vulnerable, it's uncertain, it's complex, it's ambiguous, and that is how we're describing the world currently. And I think with the huge elections coming out, specifically even here at home, Paul, I'm keen to get your overall thoughts on, how elections are likely to drive market jitters throughout 2024.
Yeah, I mean, I think elections here always come with a level of uncertainty because, the current administration is likely to lose majority. There's likely to be a change. And with that change comes a change in policy, in economic policy, in international policy. So election years tend to bring a lot of changes, tend to usher in a lot of changes. And as in electioneering Ghana's pace, that tends to lead to a lot of market volatility. Election polls, as they show which parties are, gaining support, that also tends to either alleviate or increase investor fears, right? Depending on which party is gaining support. So, election years generally tend to have a lot of uncertainty because elections do tend to usher in some changes in the national administration.
Of course, this comes on the back of a very volatile 2023 and the conversations around a global recession and even a local one here, the issue of soft landing or hard landing. Just help us understand, how we're faring at this point, looking at how the conversation around the landing over this volatile and uncertain period may affect investment decisions.
2023 was certainly quite a volatile year and marked by a lot of uncertainty, and that really stemmed from concerns around a recession globally in major markets, and that was at the back of the aggressive monetary policy tightening cycle that we saw. And central bank communication also, a lot of central banks at the beginning of the inflation peak were quite hawkish. They were talking about we're going to bring inflation down no matter what, even if it means crashing the economy. So that really fed into a lot of expectations, with analysts expecting a hard landing. And that, the hard landing essentially means that, inflation will go back to target, it will land, but the economy is going to land hard. It's going to crash, and hence the hard landing. But what we saw is, there were upward surprises to growth. The US economy showed to be quite resilient, in part supported by the fiscal expansion. And towards the end of the year, market came around to the soft landing narrative that, okay, inflation will revert back to target with growth slowing, but still positive and not in recession. And that was sort of the dynamics in 2023. And I think another thing that we saw play out in 2023 was the, central bank communication and what we refer to as the Fed pivot, where we initially, the Fed was communicating higher for longer, and then mid-year it was, okay, inflation is decelerating, so, we've likely peaked, interest rates have likely peaked, and towards year end, communicating that, okay, 2024, we're likely to see interest rate cuts. So there were a lot of changes. If I were to characterize 2023, I would certainly characterize it as a year of inflections, as we moved from, hard landing to soft landing, expectations from, higher for longer, interest rates have peaked, and then to we're likely to see an easing cycle in 2024.
So let's talk about elections now. It's an important one. In the first half of the year, South Africa has an election. But in the second half of the year, the United States has an election. And so it is looking like a full year. And of course, many other countries around the world are more than I think we've ever seen. What does this tell us about then, the investments that people could be making, and even trying to manage issues of risk, but also looking for opportunities?
Yeah. So as we were saying earlier on, that elections tend to usher in uncertainty, tends to usher in volatility, right? And what we saw last year was, in a very volatile environment, and some of the studies that were showed shows that passive investing still makes sense, because with active investing you're trying to estimate where the peaks are going to be, where the dips are going to be, and in a very volatile and uncertain environment that can become quite difficult. And in fact, the studies that we're quoting in the press release is that passive managers have actually tended to outperform active managers, particularly over a long-term investment period.
We're also going to see a concentration consolidation as themes in investment strategies in 2024. Mpho, just speak to us about this dynamic.
So that consolidation is at the back of active managers. It's been driven by active managers, and it's at the back of them trying to find new opportunities, and them also just trying to leverage on highly skilled individuals. And that's where we see most of that consolidation taking place. So it's really happening at the back of those active asset managers who are looking for skilled teams as well as skilled individuals to try and drive performance, and looking for market opportunities.
That's all we have time for today, Mpho. Thank you so much for taking us through this. It's been a pleasure hearing from you. That was Mpho Molopyane. She's Chief Economist at AlexForbes.